just in time to see the end of the week and a pretty decent rally. I mean, I know everyone's looking a gift horse in the mouth here. This is like the second or third strongest rally on a weekly basis we've had all year.
Got to say, I also think it's interesting in a day that we were kind of saying the rally hit the wall, that we're seeing some buying here into the close, folks. We're up about almost 1.2% now on the NASDAQ 100, the S&P up almost 0.8%. So we're moving close to or near our highs of the session.
We are, but it is not broad-based. There are actually more stocks in the S&P 500 that are lower than are higher. You can really thank the mega cap tech companies, the NVIDIAs, the Teslas, the Microsoft, the Metas, and the Amazons for moving this equity market higher
on the
today.
Rally.
Hey, just calling it like it is.
Well, you know, a lot will depend on what happens when the rest of the Mag 7 reports next week. And by the way, Wednesday marks the 100th day of President Trump's administration. We're about 2.5% away on the S&P 500 from the April 2nd level. So if we continue to build on these gains, he could get back to above water from Liberation Day.
Yeah, and going above 5,500, closing at that level, Romaine, it could mean something.
It could mean something here. Of course, that was the pivot point, the line in the sand that we came into this morning. And we do get a close above that pivot point on this day. The S&P 500 is going to take a while for these numbers to settle, but the closing number is going to be right around that 55.25 mark, up 40 points or 0.7% on the day. And it's also, of course, higher on the week by just about 4.5%, if my calculations are right. The Dow Jones Industrial Average up about 20 points or fractional on the day, up about 2.5% on the week. The NASDAQ Composite higher by 1% on the day and 6 to 7% on a weekly basis. And the Russell 2000, we'll just call it unchanged on the day. Actually, it was deep in the red earlier today, but some bidding closer into the close. You can see it there, unchanged on the day, and I think investors might take that.
All right. Yeah, I would say so. S&P 500, as Tim was talking about, it was a lot more negative in terms of the split before. Right now, you got 205 names as we settle in to the upside in the S&P 500, and about 296, Scarlet, to the downside.
All right, let's take a look at the IMAP. A mixed day overall, but worth noting that the three biggest sectors tied to big tech, consumer discretionary, infotech, and communication services, all gaining at least 1%. Although it is really Target and Colgate-Palmolive leading consumer discretionary up. On the downside, materials, financials, and utilities under a little bit of pressure here, with materials the biggest laggard, losing 0.75%.
All right, a lot of green there. So let's get to some of the gainers. And I got to say, my top two gainers are actually the number 1 and 2 in both the S&P 500 and the NASDAQ 100 today. So let's start with Charter Communications. This one finishing pretty much at its best levels of the session, so up about 11.5%. Cable company reported first quarter results that were seen as strong, even though broadband losses were wider than expected. So this one, again, number 1 gainer in the S&P and the NASDAQ 100. The number 2 gainer in both of those indices was Tesla, and this one just finishing off its highs of the session, up about 9.8%. You did have Transportation Secretary Sean Duffy unveiling a new framework for self-driving cars that happened yesterday afternoon, saying it would slash red tape and move us closer, the U.S. closer to a single national standard that spurs innovation and prioritizes safety. So good news for Tesla, which you know plans to launch a self-driving cab service in Texas. I believe that's happening in June, and also talking about a cybercab robo-taxi next year. One more, I just wanted to go to one of the big earnings that we got after the close yesterday and played out in the trade today, finishing well off its highs. We're talking about Alphabet. At its highs, up more than 4%, but finishing the day with a gain of about 1.5%. The company did, as we reported last night, first quarter revenue and profit exceeded analyst expectations, buoyed by continued strength in search ad business, and also talked about AI and all that good stuff, but nonetheless finishing off its highs of the session.
All right, let's go with the downside today. Intel pretty much leading losses on the S&P 500 on a percentage basis, among the worst performers in there, on a points basis too, actually, down 6.7%. As Ian King writes, Intel's short-term woes are even worse than feared. We had a conversation with him that was pretty grim about where Intel is in the turnaround effort that's ahead of new CEO Lip Bhutan. They got layoffs. They reported earnings yesterday that they came in for the current quarter below analyst projections. The company warns of a potential tariff-fueled recession that could impact chip demand. There's a lot of work to be done over there. The company also plans to reduce operating costs to $17 billion this year and $16 billion next year, and it'll cut spending on new plants and equipment by $2 billion to shore up finances. When we spoke to Ian, at this point, it's still kind of unclear what the future of the company is. He laid out a scenario where this company could be sold off for parts at some point. We don't know if that's going to happen, but that's certainly on the table, according to some analysts. Also, T-Mobile down 11.2%. Shares fell after the company reported fewer net new wireless phone subscribers than analysts expected in the first quarter. They added 495,000 new monthly mobile subscribers. 507,000 is what analysts wanted to see. And finally, Gilead Sciences fell 2.8%. This after the company posted first quarter revenue that fell short of estimates. Revenue is flat year over year with lower oncology sales offset by higher HIV and liver disease sales.
Interesting stuff. So earnings are, somewhat mixed. All right, taking to the bond market here, buying across the curve. But I have to be honest, there was nothing really dramatic with the move. But you're seeing buying in the bond market and buying in the equity market. So that's a little bit of a head scratcher there. But you're seeing yields a bit lower there in the 10-year by about 5 basis points.
All right, so here's some good news for everybody who's facing maybe the cost of college for their kids.
Sarcasm?
No, I don't want to hear it.
She's accustomed to hearing only bad news.
Scarlet, Romaine, and I. Well, Romaine, you're,
Yeah, he's
Scarlet and I are like getting close to being done.
I've actually turned down the volume on this. Just go ahead and say it.
But you said good news, right? We're assuming it's bad, but
It's bad. It's bad.
It's an incredible story. Bloomberg exclusive. Top colleges. Basically, we cracked the data, crunched the data, and are finding that top colleges are too costly, even for parents making about $300,000 a year.
Yeah, Bloomberg analysis of financial aid data from 50 selective colleges shows that in many cases, middle-class families, defined by some metrics, are making between $100,000 to $300,000 a year. They earn too much to qualify for meaningful aid, but too little to actually afford college out of pocket. So they're in this zone that's really getting squeezed when it comes to paying for higher education.
And that's why all these claims by colleges that not a lot of people pay the sticker price, they do hand out a lot of aid, doesn't ring true for so many people.
I mean, hasn't this always been the case, though? It's just the price and the band has just kept moving higher at the end of the day. And isn't this, in theory, was it Harvard or other schools, other Ivy League schools, are saying that they're going to give more financial aid or they're going to give free room and board? Remember there was that story?
Yeah, Harvard, MIT, and University of Pennsylvania in recent months expanded the range of students who qualify for free tuition to those from families earning up to $200,000 a year. So, yeah, but that's just, the top schools.
Right. Yeah, and try getting in there. The chances of doing that are lower than winning the lottery at this point.
Romaine, you can take your earplug out.
Winning the lottery. Yeah, I've been playing the lottery. Don't worry, we'll do it. Do you know what we're going to do? We're actually going to, we have to, because, our kid's a couple of years away from college. So, we have to start cutting back on some of those little luxuries. One luxury that I've enjoyed, actually, I don't know, have you ever had a cocktail with just fresh ice pulled from the glaciers of Greenland?
It's the only way I drink
Well, guess
anything.
what?
Really?
A lot of people. So there's a great story today about how this has become a big thing. And I just want to say I was up on this like 2 years ago because a couple of years ago, Martha Stewart, who's my spirit animal, by the way, was on a cruise like through the fjords here and was holding up how, she got a cocktail from some freshly chipped ice cubes off of one of those glaciers there. This is the thing. Apparently it's cleaner, it's denser, and it's delicious.
And no carbon footprint, right? No carbon footprint, bringing that ice from halfway around the world to your class, right?
Hey, if Katy Perry can go to space, I can have my glacier ice cubes.
All right, so it's 6 ice cubes from the glacier, $100, and you get a little pair of tongs. So
that's key. That's key.
Totally, right?
I mean, are they also gold-plated?
The tongs are worth
Yeah. I don't know.
Congratulations to the entrepreneur who came up with this. That's all I'm going to say. Because the fact that the ice market is that big and people are willing to pay $100 for 6 ice cubes that are imported from halfway around the world.
We didn't say people were willing to pay for it, did we?
They are. This Wall Street Journal article says
in Dubai. They're buying it in Dubai.
In Dubai.
Yeah.
Because here we'd have tariffs, right? So then that's going to increase the cost.
For the record, I've actually seen this in U.S., New York City bars as well. So it's not just Dubai.
Hey, the global ice market expected to reach, I'm not listening, $7.23 billion in 2027.
What is it right now, the global ice market?
All I'm going to say is, how much do we spend on bottled water?
I don't buy bottled. I don't know. I don't buy bottled water.
I go to the water fountain over here.
Also, what bars is Romaine going to? I think we really missed that point right there.
Yeah, that's true. That's true.
I don't know. Well, you can look at my expense report after tonight.
We will. All right, guys, that's a wrap. Our cross-platform. Have a great weekend. Our cross-platform on the markets, on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place on Monday. Take care, guys.